Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, just keep in mind a couple things. As always, you should understand that there's risk involved with each trade that you take, so you want to manage risk in a way that makes sense for you. And we'll go through some ideas in that regard with some tools that are built into the order window. If we simulate a trade or two, it's quite easy to calculate potential profit, potential loss to your stop loss, etc. Within our order window. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our WebTrader platform, which allows you to trade on both our MT4 and MT5 accounts from the same location and with the advanced functionalities and tools that you'll only find in our WebTrader and app. So if we log in here in the upper right-hand corner, we'll be in the WebTrader platform. And before we get into the technical analysis patterns that we see today on the charts, we could talk a little bit about the fundamental news. What's been happening today, some trade deal talk out of the US has made the headlines. Basically some optimism, some positive momentum in that regard. I think Japan was the latest country to sign a trade deal with the US. So gradually the global trade tensions are becoming less and less, which is not just good news for the US, but for the rest of the markets around the world. I think there's still a focus on some deals with the European Union, but we've got deals in place now with several countries, including the framework with the UK, now Japan. There's actually a framework with China as well, some agreements that have been made, and other countries as well, like Vietnam and others that have been mentioned that have signed deals. So that's some general optimism on the markets, in particular maybe the US indices are doing well, looking pretty bullish. In general, I think fear is down a bit, barring any new headlines that might come out causing any fear. The momentum seems to be kind of bullish with the equities today. And the safe havens maybe have a little bit of bearish pressure on them. And we'll take a look and see what kind of opportunities might be there. One bit of data that was negative today out of the US in particular, the housing data that came out was a little less than expected. And I think that's been a trend in the US. Things have been slowing down more and more, which is why Trump and his administration have been calling for rate cuts from Jerome Powell and the FOMC committee. We'll see if those come anytime soon, but it looks like the timing could be near for maybe rate cuts to start again in the US on the federal interest rate. So we'll see how that goes. And so let's take a look then at some signals, and maybe we'll get a feel for what's happening. One thing that I noticed was the NASDAQ was a little late in getting into the green today compared to the other US indices. So if we wanted to go to a view of a few charts, we could take a look at maybe the US 500 and NASDAQ and maybe Dow Jones, just to compare the different US indices to see if there's a trend that we can spot and maybe an entry point that could make sense. So we've got the US 500, the Dow Jones, and the NASDAQ 100, the US Tech 100. And so what we see here is exactly what I described. If we're on 1 hour candles, let's go 1 hour here. And we'll go 1 hour candles here. Okay, we see on the US 500 chart that we're at an all-time high type situation. Okay, all-time highs have been hit again and again, and here we are again at all-time high for the day and overall. Same here, that's on the US 500, same here on the US 30. breaking out to the high of the day and a high anywhere you see on the chart. But when we look at the NASDAQ, it's just barely into the green on the day and looking to try and break through maybe a resistance level here. Okay, and the all-time highs are way up here. So the US Tech 100 is lagging a bit. And that's because maybe there's some earnings coming out at the end of the day today. There's some companies reporting, including Google, I believe, will be reporting at market close. And some others have some numbers coming out. So there's a bit of cautious optimism there. And so that might bring in an opportunity with the US Tech 100 if it's going to follow the same patterns that we see here with an uptrend showing itself on each of these charts. And we can see, if we draw it out, we can see strong uptrends. And then we see here that it has not gone up. We actually had this downward movement here. So we don't have that uptrend yet. If it comes up here, then it would be in line with these other charts, okay? Given that something like 75% or so of the US Tech 100 is in the US 500, the US 500 seems to be having no trouble reaching new all-time highs. So it could be that this is just a delayed move, we'll see, but it could be an opportunity. So if we then go to a one chart view, and let's bring up just the US Tech 100, which is lagging behind. So let's get rid of this line maybe. And take a look. And so if we say, okay, it doesn't need to break past the all-time high, if it just gets near it, that could be a spot where it would meet resistance and maybe you look to take profit if you're looking to go long on the US Tech 100. Now, if we type here and check what's the most recent technical signal on the US Tech 100, otherwise known as the NASDAQ 100, there is a live signal and it's a buy. So the folks at Trading Central think this is a buy according to the current trend and that there's a support level at 23,170. Okay, you see here it says support / pivot level. If it drops below here, they say sell. As long as it's above, it's a buy signal, and take profit zone up here, topping out around 23,420. Okay, so if we decide then, we already thought the fundamental news was positive. We see that the overall U.S. market is trending up with the U.S. 500 and the Dow Jones, with quite a bit of overlap between the U.S. Tech 100 and the U.S. 500 in terms of companies that are included. So maybe now that you looked at the technical signal, you feel better about the technical signal because you understand the fundamentals, maybe an overall trend on the other charts maybe are telling you to buy as well. So if you felt that this was a buy, then we can start to draw some lines and say, okay, support level down here in this range. Maybe if it doesn't drop below the low point that it was at just a few hours ago, where it bounced up off this little support level here, which is near that pivot line from the signal. You see this was resistance and then became support, tested it once, but held as a support, tested it again and held as a support. So without having to break the all-time highs, we could take profit if you were looking to buy on this at 24,000, say 415. 23,415. Okay, stop loss below today's low, so 23,000, let's say 140. Whoops, I changed the take profit. Let's put that back. 23,415. And we want to change the stop loss. 23,140, we said, to get below that support level line that I drew. Okay, so now I look and I say, okay, ratio about 1.5 to 1, around 6,500 potential profit, about 4,500 potential loss. So it's a somewhat opportunistic entry point. We've got a good confirmation of a bounce off this support level, a little larger potential profit than risk without having to break yesterday's high. Okay, so that's the setup right now. And this is pushing back down a little to give maybe even better entry point as I'm talking. So it's getting closer to almost a 2 to 1 ratio now on potential profit to risk. Now, how much do I want to risk on the trade? Maybe only a certain amount. You go in maybe wanting to risk 1% of your account or 0.5% or 2%. You have a certain amount that maybe you're comfortable risking. And so I take a look and I say, if I change this trade size to say 0.1, then I'm risking 900. Well, 1% of my balance, if that's what I was shooting for, would be about 571 or so. So then I say, okay, let me adjust my trade size, 0.07. And now I'm risking less than, or just over 1%, I should say. So 0.06 would get me under 1% risk. 550, 560, almost exactly 1% to go after over 1,000 profit. If I like that setup, then I buy. Okay, so now I've done risk management. I know the amount I'm risking. I know my stop loss is down here, just below this support level. Okay, so it has to break to a low below this bounce in order to confirm that I'll get out of the trade at my stop loss. And if it doesn't do that, then I'm looking to take profit before this resistance level where it hit and dropped, okay, which is the all-time high area, just before that, without having to break that level at about 23,415. Okay, so it's a nice setup if you were going to trade on that signal by itself. Trading Central was saying it's a buy signal. With their take profit zone up in this area. Their pivot line was down near where we put our support level. It lined up with our analysis of where there's some established support. And at the same time, maybe the fundamental news is on our side. There's a bit of optimism today about trade deals. And a lot of that involves the tech industry, these trade deals. Japan has, for example, in the trade deal that they announced out of the US today, Japan has promised something like $65 billion of investment into the US. And I believe it's maybe to build factories and have technology built in the US rather than importing it and paying tariffs. So a lot of interesting things going on there with those trade deals that creates maybe some momentum on the markets. The one wild card right now is, as I mentioned, there are some earnings numbers coming out when the market closes today. And Google's a pretty big name for those numbers to be coming, and is obviously in the US Tech 100. And so that's the one wild card. Are a couple companies that are reporting later today, but we'll see. It's a small risk here to go after almost double the potential profit. And it's a nice setup going in the direction of the signal from Trading Central. So we've worked out a strategy concept where we're trying to make sure that the fundamental news is at least neutral, or hopefully in our favor, and that the technical setup looks good and maybe agrees with the technical signal in this case that we looked at from Trading Central. And so if all of those things didn't line up, then maybe you don't follow the signal. And that's how I would say you should use really any of the signals. And we could go back to the trade area. And if we follow any of these signals that are coming in, I wouldn't personally just blindly follow a signal. I'm going to check out the chart. Do I like the entry price? What's the current trend doing as compared to what was predicted? Is it still trending in the right direction? Is it showing that it's respecting, in this case, a support level like it did? And also, what's the most recent fundamental news? Is that in my favor or is it working against me? And then you can start to say, okay, yes, I am interested in following the signal, or no, I'm not. Had I clicked on the signal for the US Tech 100 and it said sell, I'd be a little conflicted about that, because overall, as we look, the Dow Jones, the US 500 are climbing towards all-time highs again, and the volatility index is down on the day, showing low level of fear. So I might have a hard time selling on a sell signal for something like a US index right now. But in this case, it was a buy signal, and kind of everything lined up maybe to have some confidence in that signal. It doesn't mean that you can't lose. Like I said, those earnings coming later today, that's the wild card. But we'll see. We don't know what those numbers will be, and I think most maybe anticipate that those numbers will be good for Google and for some of these other companies, and that might actually work into the favor of the US Tech 100 then being able to bounce right now as well. But we'll see. There's always fear of the unknown when those numbers are going to be released, so we'll see what happens. But like I said, small measured risk with a nice potential profit, near double what the risk is. And by the way, if you ever want to reevaluate your trade, to adjust things, you just click on the positions. You'll see the open trade running. Obviously, it's just getting going, but you can adjust your stop loss and your take profit at any time. So I could grab this, drag it down a bit. Okay, now I'm risking a little bit more, but I've moved my stop loss a little bit further away if I want to slide it down. Maybe I take a look and I decide I wanted the stop loss below these low points here. Okay, now my risk and potential profit are a bit more equal, but maybe I'm comfortable with that 1-to-1 ratio, risking maybe 1.5% to try and make 1.5%, something like that. But you can always do an adjustment at any time, just without having to type the numbers. You can click and drag the stop loss and the take profit price as well. So I could come up here, left click on the take profit, and drag that up and down also. Okay, obviously the open price I can't change once it's already been opened, but stop loss and take profit I can adjust at any time, as long as they haven't been hit yet. Okay, so what else can we take a look at? The US dollar has been somewhat bearish over the past month, 2 months, 3 months, as there's been anticipation that, hey, the US is maybe going to cut rates at some point. They haven't anytime recently, but let's take a look at something like the Euro USD. And when there's optimism on the market, it's a kind of low fear. Sometimes that leads to a weakening USD. But let's see what those trade deals are doing on the signal aspect. And it looks like, again, it's expected the USD will be somewhat weak. When there's fear, a lot of times stocks are selling and the US dollar is strengthening. When there's optimism, the opposite many times, stocks are going up and US dollar is weakening. And that's what we see right now, as the Dow Jones, the US 500, and maybe the NASDAQ, we'll see, are rising. US dollar looks to be weakening. And so we have a buy signal here with the technical setup from Trading Central for the euro to climb against the USD. And with that weak housing data today out of the US, that only helps the idea that maybe the wind is blowing up here for the euro from a fundamental perspective against the USD. So then now it just comes down to, do we trust the technical signal as well, that it would go up towards, say, 117.98, almost to 118 even, is the signal prediction. So we can take a better look at the chart. We're on 1 hour candles here, and it looks like it's trying to break this resistance level right here. Okay, and if it does break this resistance, which is just now touching, it's trying to break, according to the signal, it will break this resistance and climb. You could do a pending order instead. So the signal says it'll break up to maybe 118. Okay, there's probably resistance in the past. We can take a look at the larger candles and see if we find any, and indeed we do. So why does the signal say take profit at this area? If we come across, we see that in general there's resistance where it got here and came down, hit here and dropped, hit here and dropped, got in this area and dropped. And you remember in this signal, there's a range for the take profit. So 117.79 is the bottom of that range, which is right about there. So you see the resistance starts here, where it's hitting and dropping, and the upper end of the resistance was here, where it had trouble breaking past here and dropped. So that's why in the signal it says you might think in a short-term move anyways to take profit in this zone, which are these two lines of resistance from the past. Okay, so those recommendations for take profit are not just made up out of thin air. This zone for take profit is because there's resistance in the past on the larger candles. So now the question is, do you think this will go up and break the resistance or not, right? You don't have to guess. You could just do a pending order if you wanted to. You could say if it breaks the resistance and hits, say, 117.64 or somewhere near there, then maybe you're interested. So if I say, okay, I'll buy, but only if the price hits 117.65, let's say. So if it breaks that resistance with a technical breakthrough, that would be a breakthrough candle. It's a technical trading strategy. Break the resistance, and a lot of times when the resistance breaks, you get a surge further up towards the next resistance. Okay, that happened here, by the way. Okay, there was resistance. You see from the past, resistance and dropping, and then resistance again and dropping. And then what happened when it broke that resistance? If your pending order was right here above that resistance, once it broke through, up it went and surged to the next resistance level. Okay, it's like a staircase. You see a step and a step and a step. Okay, if it breaks through, maybe it goes up to the next step, the next price level or resistance level. It doesn't work every time, but you see just in the last example, it worked. It broke through and up it went. Okay, since the signal says buy and the pattern on the chart looks like a staircase that's climbing, and the fundamental news maybe is on our side, reason to think that there might be rate cuts coming in the US with the housing market slowing down further today with that data, and a lot of inflationary data has been lower than expected as well recently out of the US, leading to many to believe that rate cuts should come soon. Maybe Jerome Powell doesn't think that, but many others think that might be coming. And so that type of thought process helps lead to a weakening of the USD potentially. Okay, so the fundamentals maybe are on your side, and if the technical breakthrough happens, then you could be in on that trade if you wish. Okay, and so instead of blindly following the signal that says buy right now in Euro USD, since you're not giving up much ground to wait for confirmation of an uptrend continuing, you might just put a pending order up here. If it breaks through, you take the trade. You also could put a pending order on the support level, and if it pulls back down to the support, you could take the trade from a better price. Okay, two different pending orders that you could set up. Both make logical sense why you would do that. Okay, so execute when price hits 117.65. Then my stop loss, if it does break through, and I expect this type of movement with momentum, it never broke back below this price level by much. So if I get my stop loss below this resistance level here, if it breaks through, a true breakthrough would then climb like the last one. And so if I enter up here, my stop loss could be just back below that price level with my take profit up at the resistance level up here for a nice little scalp type move. Okay, and that would be in line with the signal from Trading Central, but qualifying it that you'll only get in if there's a breakthrough of the resistance in this example. So if it hits 117.65 here, then our take profit is at 118 or 117.99, let's say, just before the resistance at 118. And stop loss then would be down below 117.64, so back down below the resistance level, which should act as support. So maybe down here, somewhere around 117.50. Okay, so if it hits and enters. The stop loss is 15 pips down. The take profit is about 34 pips up. Okay, so better than double the potential profit compared to the risk. And that's a pretty patient stop loss to get it down 15 pips. It would really have to reverse back after breaking through. It would really have to reverse back down, which this example did not do. So if it does this, then you'd be a winner. Okay. All right. So then we look at, we've got the ratio set up. We've got our entry price and our exit prices at the resistance and below the support level. Now we just need to adjust the trade size to be the proper risk that you're comfortable with. So if I go one lot, I'm risking 150. If I go 4 lots, I'm risking 600, which is a little more than 1%. So maybe I go 3.7. And now I'm risking under 1% of my balance to make over 2%. Okay? If I like that setup and risk profile, then I'm good to go. I've got my pending order in. So another option on this, if you wanted to buy, but maybe also give yourself the opportunity for a potential better price, just put a pending order here. Okay, exactly like we put a pending order here, but for the price level here with your stop loss then down below and your take profit back up. Okay, and you know, I won't take the time to do that right now, but you absolutely could. Exactly the same process that we did, and you have a second option in case it pulls down to enter at an even better price. Why would you buy if it was indeed downtrending? Because you trust the support level, because it held once and there's a buy signal and maybe the fundamental news you feel is on your side, etc., etc. Okay, but sometimes it is a little more difficult to buy after a downtrend, because if this comes all the way back down, you're wondering what caused that and will it break the support level? Whereas the pending order being up here only buys if the uptrend continues, which some people feel a little stronger about that way. You're giving up the entry point, buying from a higher price for the benefit of knowing, hey, it's an uptrend that's continuing, at least for that time being, when you have your pending order above the current price to buy. Okay. By the way, if there are any questions, just let me know. I see one question. Can you use a trailing stop when executing a pending order? We do not have the trailing stop option on our web trader or our app, but directly from the MetaTrader 5 and MetaTrader 4 platforms, once the trade is open, you can then add a trailing stop once the trade is already activated, but not on a pending order. Okay, that is a feature I'm hoping that we're going to have added in the next quarter, maybe, to our web traders, to have the ability to add a trailing stop in real time from our web trader as well. Very good question. Okay, so we could look at one more instrument maybe. You know, the safe havens like gold tend to be bearish when fear is down, and this is just an example of that. Okay, for the past 4, 5, 6 hours, we've known the volatility index was down all day. Fear has been down, and so we knew trade deals were being announced. So you easily could have sold on gold, and you could have done a technical setup so that you're not just hoping it drops. You could have found the support level. Okay, here's the support. Had a pending order below the support, so that if it breaks the support level, here it broke, boom, it triggers your trade. It never went back above, and down it went. Okay, so the reverse of what we just set up for the Euro USD and for the NASDAQ. We set up pending orders, and if they break upward, they'll open. In this case, you could have done a pending order below the support level on gold, knowing that, hey, safe havens tend to drop when fear is down and when there's, you know, great trade deals being signed, and had a pending order below the support level, and it's just an easy entry. It would have triggered and you'd be in a nice profit here. We're talking, what, 20, 30, even $40 per ounce drop, okay, which was pretty easily predictable with what was happening today with the sentiment. with the bigger fundamental news. So what I'm pointing out here is when you start to combine the fundamental news with your technical trading strategies, okay, it makes it that much more effective when you start to do pending orders below support levels, for example. Why would I not have put a pending order above the resistance? This would have triggered maybe a buy pending order up here as it broke through the resistance, and then it would have been a loser. Why would I not have put a pending order to buy? Because all the news was positive today. The fear was down, the volatility was down, and there was positive news about trade deals. So I would be more likely to avoid the upward movement when it breaks the resistance with pending orders, because I would be afraid of a false breakthrough, and I would trust the break of the support level more because of the way the news was setting up. So I suggest when you're doing your technical analysis, do a quick overview of what's the sentiment today. Which way is the wind blowing, so to speak, with fear and with the major headlines? And then you decide which directionality you want with your technical trading strategies. And then this was an easy setup to have a pending order below the support level, for example, with gold. Okay. And I think this is a good place to stop. We could go through some more setups of trade examples, but the risk management works pretty much the same way each time. With the order window calculating, once you find your support and your resistance levels, where you want your stop loss and your take profit and your entry price, then you just adjust your trade size. Once your technical setup is there, you adjust the trade size to be the amount of potential profit and risk that you're looking to have within your trade. Okay, and the technical signals are a great tool to help you understand, well, what are the supposed experts think? Okay, they were saying to sell from earlier today. As long as it was below that's the same support level I just drew, by the way. I said put your pending order below, and if it breaks, sell. Well, that's exactly what they have here. As soon as it broke below, the sell signal came out, and it was a great signal. Down it went. It's almost to the take profit zone for that signal. Okay, so you can see that these signals can be very accurate if you also first think about what's the fundamental news, and then see if it aligns with the technical signal. And if you like the entry point, then it makes sense to act on that. Okay, any last questions, comments before we end the session today? Okay, great. Thank you all for joining. I'll be back with another session tomorrow afternoon, 11 late morning UK time, 11 a.m. UK time. We'll focus more on the fundamental news, and obviously we'll look at the technicals too for entry points and exit points. But we'll look a little closer at the economic calendar, what the latest headlines are, etc. on the fundamental side of things tomorrow. And if you can't make the live session time, they're all recorded as well as this session and uploaded to our YouTube channel by the next business day. All right, everybody, thank you for joining and good luck with your trading. Bye for now.